If you're in your 30s, you may be hitting personal milestones like getting married, having kids, buying a house, and even advancing in your career. But are you also hitting these personal financial benchmarks that you need to have a successful retirement? There are a few key benchmarks that you can quickly look at to know if you're setting yourself up for success. I'm Matt Bremer, owner and wealth advisor at Queen City Wealth. I work with individuals and families to make smart decisions as they prepare for retirement. If you find this information helpful, be sure to reach out and we can work directly together. As you enter your early 30s, you'll know that you're on the right track if you have saved 1 times your income in investable assets. This is where you'll start to see noticeable gains and be able to compound into real wealth for the future. If your income is at least 100,000, any more than 1% gain in the market will be over 1,000. If the market is up 10% for the year, you could see a $10,000 gain in your investment account. That is real noticeable wealth, and all your hard work for the past several years and investments will start to feel like it's paying off. You'll be able to feel the difference. You'll see your account and notice your account growing in size. For this factor, you should just look at your 401k, IRAs, and brokerages and look at the invested amount across those accounts, and should not consider your home equity or other cash as part of your one-time save. The second part to consider is also having a cash-funded emergency fund. As mentioned, life is becoming more complicated in your 30s with your family, children, house, and healthcare costs. The question doesn't become if something comes up, but rather when something comes up. That way you will be more well equipped to handle the surprise house issues. Maybe you need to fix the leaky roof or you need to replace the furnace. Having the emergency fund available will suit you well and not set you back when the issues come up. You'll still be well on your way to a successful retirement. Are you receiving the 401k match at work? This is free money that you do not want to miss out on and can also help reduce your tax bill by your contributions being pre-tax. Then you need to start thinking about your post-tax contribution. Are you contributing $625 to a Roth IRA? This would equal $7,500 for the year, which is the contribution limit for 2026. Are you contributing to your HSA each month? The 2026 limit is $4,400, which is a monthly contribution of just under $367. The funds are contributed post-tax and then grow tax-free. Any funds from a Roth IRA are then tax-free in retirement as long as you make qualifying withdrawals. The HSA is known as the triple threat advantage because the contributions are tax-free, it grows tax-free, and then the withdrawals are tax-free. A powerful tool as you can continue to build wealth and let the compound over time. The most efficient way is to set up a monthly contribution each month and automate it from your paycheck or bank account. This just becomes part of your monthly process. You don't need to notice the funds going in and out. You'll just notice the investment account growing. By automating this, it becomes easier to budget around as it is always occurring. Now, by contributing $625 monthly to your IRA and $366 to your HSA each month, this adds up to $991 each month. It's nearly $1,000, which would be going into a retirement account. Now, the often cited goal is to save 25% of your salary each month and year for retirement and investments. That $991 a month gets you almost halfway there if you're making $100K a year. Now, if you had the contributions to your 401k plus your employer match, then you're almost there. Small changes to your budgeting and investing could easily get you to 25%. You can either contribute more to your 401k or start investing in a brokerage account to have more flexible funds. Because we started the video by saying you wanted to have 1 times your salary as you start your 30s, and doing all these steps will help you to get to 3 times your salary by the end of your 30s. Your 30s are a pivotal decade for compounding wealth. By implementing these strategic saving habits today, you aren't just managing money, you're securing your future freedom. You can start small, automate your contributions, and watch how these consistent steps transform into real, lasting financial security. You can reach out to me at Queen City Wealth about working together, and I can help create a financial plan to set yourself up for success.